Hi everybody, it's Markonomics 101 back again, presenting Hoot Loot, the show where you come to be informed, be amused, but never be misled. We tell it like it is because God knows there are enough people telling it like it ain't. And they absolutely populate, media and network news and cable news, and they're the leading cause of mental illness in the world, as many of us have found out, accidentally. Today, I'm sitting in front of an empty Congress. Why am I sitting in front of an empty Congress? Because they don't do a damn thing. If they did anything after 22 consecutive terms and terms and terms and terms, maybe something would be accomplished, and we wouldn't be sitting here poverty-stricken, by a man-made disaster. So, what I would like to see, and this is one of the things that we are presenting to you in this show, vote out the incumbents. Let's get rid of these people back here. They screwed up. Fire them, get a new set in, and get a new set in, and get a new set in. There are a lot of talented people. This is not, politics is not supposed to be a professional politician, and people like Miss Pelosi from San Francisco are not supposed to amass a fortune of $200 million being a politician. As Harry Truman said, show me somebody that makes a lot of money being a politician, I'll show you a crook. In any event, we're going to be, if you'd like and subscribe down here, I'd appreciate it. And we're going to be right back with the charts. Well, we have a lot of mixed information for you today in the charts, and I'll tell you this, I wouldn't want to be pushed and forced to make a decision here because there is a whole bunch of factors that say straight up. There's a whole bunch of factors that say straight down. All I know is things don't make sense. There are very powerful monetary forces acting upon the markets and keeping them from equilibrium. And at some point, the markets cannot stay at equilibrium, and there will be some kind of implosion. I don't know when, I don't know how big, but it's bound to happen. You cannot, a free system, you cannot enslave it, even though certain people would love to do that here in this country. You're never going to get me. You're never going to get me. You will never get me. I promise you. And nor will you get any of these nice people around here either, because I'm not going to let it happen. All right, so this is the 200-year chart of U.S. real interest rates. Now, a real interest rate is when a negative real interest rate is when the 10-year bond, it yields less than the CPI. So that would be a negative rate. In other words, the yield is not enough to compensate you for inflation. Okay, so this goes back 200 years, and the numbers that are below, the midway point, especially the red oval at the end, shows you that we're in very highly unnormal real interest rates that are negative. This is always been good for gold, by the way, in the past. Now that doesn't mean it'll be good for gold like tomorrow, but it has been good for gold because this is what causes inflation right here, is a lot of this kind of monetary mismanagement and all that, and gold is just more than happy to pick up the slack on that. I know Bitcoin is too, but it doesn't really have anything to work with. So, passwords can't really do too much. This is called the U.S. debt clock, and I wanted to put this in there because it shows just how mismanaged this country is by its incumbents. Look at this, $29 trillion of federal debt. We're now 145% of debt to GDP. That has occurred while all these incumbents have been winning over and over and over. And in San Francisco, I understand they even celebrated so much they got to take a you-know-what in the streets a couple times, because San Francisco allows it. So does Los Angeles. Wonderful cities when you allow people to crap in the streets. That is what I call great public policy. So, if you want to vote out those incumbents, I'm right behind you. But anyway, the debt clock shows you just how badly managed we are as a country. Can you imagine if you, as a private citizen, you spent $30,000 or $40,000 a year? That's what you made, but it cost you $70,000 to live, and you had $3,000 or $30,000 a year in negative cash flow that you either had to borrow from somebody who had a printing press, which is what we basically do. We go to the Federal Reserve, we borrow it as a printing from the printing press. They just print up the dollars and buy the dollars from the Treasury, that are used for the bonds. So, we don't really get anywhere. It just looks like we get somewhere. But, no one could live the way that Congress lives and keep their jobs and stay solvent. Why should we have people so stupid and so inept in Washington, D.C., shepherding our finances when we would never do that at home and they would never do that at home? Because they don't care about you. You work for them as far as they're concerned. They don't work for you. You work for them. Well, I would like to take this moment to start the vote out all the incumbents movement and get rid of all of them every year, every time they run. We don't need them for more than one office. It's not that hard. There have been dummies all over the place that have run, for office in Congress, and you know who they are. You know who a lot of them are. We may disagree as to who they are, but there's a ton of them. These are not rocket scientists. I assure you, they are just corrupt, power-hungry sociopaths. All right, let's go to Bitcoin. This is one of our canaries in a coal mine. Bitcoin actually looks like it has made a double top. We speculated that last week, although it started to actually come up and challenge its highs again. The Bitcoin ETF came out that got $1.2 billion, so that really helped. Then we have Tesla, the other canary in the coal mine, and this is today's car wars. Electronic vehicles. Right now, I'm going to tell you this. Electronic vehicles, if you add them up, and I will go through this with you, they're about $2.5 trillion of market cap. 2.5 trillion. That's as big as Apple, okay, by itself. And yet we have probably 20 different competitors. We have companies that are coming out that have never even done a car before in their lives. And this is one of the biggest sectors now in the economy, maybe this and semiconductors. But I mean, between semiconductors and auto cars, I don't know that there's anything else to live for. I just think we just roll around the city and like what are bumper cars, and we just have a good old time and they just take us around. I don't know. Apple, though, does have a neat concept. They have no pedals. They plan no steering wheel. And I think it would be kind of cool to have Apple Music in there. Maybe not Alexa. I could kind of pass on Alexa. But, there could be a lot of Apple innovations in there, Apple TV and all that, where really you're riding like a bus or a taxi. You're not really riding in a car because there's nothing you can do. You just get in, you just get out, and that's it. They say by 2025 they're going to have it. The market is so big, and that's the thing. These vehicles, these EVs, the market for these EVs is massive. I don't know how it got that big, but it got huge. And it is in the $2.5 trillion range. I will go through that with you in a moment. Tesla is about half of that right there, $1.2 trillion. And it was that sale to Hertz where he made $250 billion off a $4 billion sale. Boy, I love those numbers. I wish I could get those numbers, but he's the magician and not I. Dow Jones Industrials broke out just as we had surmised. They didn't break out really sharply, but they've been in a consolidation pattern for a long time, and it was inevitable they're probably going to break up, although they're not going at a really rapid rate yet. So we'll see. But there's an awful lot out there that is rolling, and I could easily see, although it's hard for me to see, but I could easily see another market melt up lasting a few months. And people are so complacent right now, it's not funny. You look at investors' intelligence surveys, and newsletter writers are 3-to-1 positive. The Joe investor is 3.5-to-1 positive. So everybody is leaning and on the right side. Nothing looks like it can go wrong. And you know what it is when something doesn't look like it can go wrong. That's just about the time. So I want to caution you. All the charts look really good, and we could have a melt up, but have tight stops. And I want to caution you about it because there isn't a whole lot of value. I just don't know how high this value can go. It is already way out there. The NASDAQ 100, and here you go. The NASDAQ 100 is also broken out, and it's broken out quite smartly. And this is where a lot of the market pulling is coming from, is emerging NASDAQ stocks, not even ones that we already knew about, but ones that all of a sudden have become trillion-dollar companies out of nowhere. The S&P 500 also looking really good. We said that last week. We've been saying that for weeks. This thing continues to look good. You cannot fight this tape. You cannot say the market yet is poised to go down or anything like that with this behaving this well. Small caps, same thing. When you have small caps behaving well, you have speculative confidence, and you have a lot of little companies that are doing well. Little companies are the backbone of America, even though we shut most of them down because of the flu, I think. Restaurants and nail salons and all that kind of good stuff. But who needs those after all? I mean, we don't need to eat or, have nails or anything like that. Anyway, S&P small caps doing really well. Dow Jones Transportation, I mentioned, these things came screaming back, and they generated a Dow Jones buy signal, which is the industrials going up and the transportation's going up at the same time. I find it kind of hard to understand why the transportations are going up when nobody can get anywhere. Everything is like, bottlenecked, shipping companies and rails and cars, and there's a lot of traffic and all that. But I'll tell you this, transportation and logistics are critical. They're earning premium fees right now, but they are hard to execute right now, and you're getting fines and things like that. The US dollar is probably the biggest surprise to me. I would have guessed this thing would have been 10 points lower. But for whatever reason, the US dollar is going up. This is the last year that you're looking at right now. The US dollar, for something that is being printed like crazy, against other things which are fixed in supply, I don't understand it. But I will say this: if the Fed has a strong dollar, they have a strong weapon, because the weapon of the Fed is interest rates in the dollar. You cannot have a lot of leeway with interest rates if the dollar's weak. So the dollar's strong, and you have something that you can give people that actually will compensate them for it, and it's not going to be something that's going to cause financial problems. The Crb Commodity Index, also continues to go up. It's gone up 130% in a year, something like that. And it's just a blend of energy and grains and foods and you name it. And even lumber started to go back up after it had that little wild run earlier in the year. But the CRB says we have a long way before inflation starts to taper off. Just because the CRB is tapered off doesn't mean inflation has worked its way through the system. It will work its way through the system, kind of like, you have a bad chili dog and it works its way through your system, and you go, thank God, when it's finally done its work, it's worked its way out. The Dow Jones Reit Index, real estate continues to be what I consider to be among the best hedges out there. They are not making more real estate. They are making more dollars. These things continue to yield more, rent more. They have had very good occupation lately. And so basically, the Reit Index is one of the places I think you can hide for a long period of time and actually pretty well hedge against the dollar. Gold will not hedge you that well. The Bitcoin will not hedge you that well. They will over or under hedge you. Real estate will probably approximately hedge you. So that's what I like about it, and it has something which it gives in terms of utility value. Now, another great hedge, I think, honestly, people have asked, has been the Dow Jones Reit Index. I mean, for one, you get a yield. You get a 90% tax advantage on the yield. They're thrown off pretty much mostly as cash flow type vehicles. And you get the appreciation in the real estate. So, you're going to have expenses and other things along the way, but you're going to have a play here. And this is a good place, to look for a play. You can either get a public storage, you can get a mall. There are all sorts of commercial buildings out there, and they're starting to fill up a little bit. Like crude oil, finally took a little bit of a nosedive the other day after going up like almost 8 weeks in a row or something just unbelievable. But it took a little bit of a nosedive, and here's the thing. There has been signs of recession, of the economy slowing, and of the economy booming. And now I'm showing you one of the economy maybe slowing. because all of a sudden crude oil is coming off, and there was pretty brisk demand for it. And plus, it was in short supply. We capped all the shale oil wells, thanks to the new administration who didn't want us to be energy independent, I believe. The agriculture fund, these are food products. And look at that. Food products continue to move up. If there's one thing we all know, is food costs more. And, Ace knows that pretty darn well because he's reminding me about it all the time. Copper miners possibly are turning up, but again, they're showing of an economy that may have just taken as much stimulus as it can get. I mean, to be honest, there's only so much you can do, and there's only so much you can produce. You need to be able to produce. You can't have just people. You can't have just money. You need them to be producing something tangible, like a pen, but not like a government bureaucrat, which is basically gonna get a piece of paper like this, shovel it on to the next guy, and that's it. No GDP for you, and that's the thing. Too many people not doing enough, and too few people doing too much, making sure that the rest of the people are taken care of. Base metals too, these have come down. Again, a sign that maybe we finally had our last little burst from the stimulus bill and all that. We're going to keep a close eye on this. I'm not going to make a definitive call on it quite yet. But all of the individual companies, with the exception of Alcoa Aluminum, and people are using cans to store things, other than that, they're not looking very good. Here's gold. And, I've been a gold buff forever. I've been a wrong gold buff forever. I've been an incorrect gold buff forever. But I will say this. I, right now, still have got to double down on gold as a long-term hold. Now, I'm not saying it's going to go up tomorrow, but what I am saying is this. This is a pattern. This is a 20-year chart here. This is a very constructive pattern that it's in. You can't tell unless you really stand back and look at it from 50,000 feet. But if you're like right in its face and it's a year chart, it looks all over the place and you just have no idea. And, when it comes right down to it, gold has lasted 5,500 years against things like paper currencies. And so far, I don't know of any passwords that have done that. And speaking of passwords and the companies that have them, the cryptocurrencies, why can't you get your password back? I really would like to know that. No one can yet answer why you can't get your password back. What would be the business reason? I only know of one that I can think of, and that would be a very greedy government. But that's the only one I can think of for the moment. I'm not sure which government could possibly be that greedy. Maybe one that raises taxes all the time and loves to lock you down and mandate you with masks and jabs. Silver looks good too, even though silver is not at a new high, hasn't been. It's in what's called a cup and handle. And a cup and handle means that it has basically based out, and now it is forming a little bit of a consolidation. Remember, this is 20 years. So that's like a 2-year sideways move. When it moves, either up or down, it will move. This is why you look for patterns like this, because once they break them, they go for a long way. There's a lot of energy that's been stored up in that little box. Treasury inflation securities, well, these are telling you inflation expectations are going up. The way these securities work, they give you a small yield, which you already don't get anyway. So that's already a plus. Plus, they accrete. So if the CPI is 6, and you'll accrete at the at 4. You'll accrete at the difference between the yield and the CPI. So you'll at least be able to hedge some of that inflation risk. The CPI is terrible. Now once again, used car prices are going to be the dominant in the next CPI report. I have no idea why, when there's all these Lyft and Uber cars and auto driving cars and robo cars, and all of a sudden used cars are going up. 5-year yields creeping up slowly but surely. These are way too low. Inflation. I don't know whether 6 is ridiculously low, and I'll say that if it's 6, um, I don't know. Will I eat crow or I'll do something? But I'll tell you, it's more like 8 to 10, and this is and you got to wonder who sells 30-year bonds yielding less than 2 when inflation is 10%. Who does that? Oh, the Treasury and the Fed. They're there to put your Social Security trust fund in 2% yielding bonds. Do you know that the biggest holder of foreign debt of ours is us? Social Security and everybody else. It's not China, it's not Japan. They wouldn't hold on to stuff yielding so little like that. It is us putting it and forcing other citizens to have to take those crummy yields while they're waiting for those benefits. 10-year yields have come down. They have not gone up. Now this is really weird because there are so many signs of inflation that are almost inarguable, and yet this should be going up. It should be higher than the 5. It's not. It's come down. Same here. This one even looks like it might break down. This is the 30-year. Well, the 30-year happens to be the bond of choice for Social Security funds and things like that. So this is going to be no human that had a brain would buy something here at below 2% for 30 years, knowing the U.S.'s track record with inflation. So it's the U.S. It's the U.S. They're such good money managers. Aren't you glad you elected them? Now fire them. The bank index, we wanted to show you this because when we talked about yield curve flattening, okay? When the 30-year bond, the long bond, okay, when it starts to come down in yield and the shorter stuff like 2 years or 5 years goes up in yield, then you have what's called a flattening. You have the 30-year, the differential coming up. Well, we've seen quite a flattening. And when we saw a non-flattening yield curve steepening, where I had that in red, you could see banks were doing just well. Why? Because they lend long at a higher rate and borrow short. Okay, that's the main reason right there. And now they can't do that anymore. And so it's flattening, and they're going to have fewer opportunities to make money. It's really hard with an inverted yield curve to make money if you're a bank. Broker dealer index, there are so many new IPOs coming, it's not funny. SpaceX, I'm starting to think SpaceX will come at like $300 million, and no one is still going to ask. No one is still going to ask Elon, how is it that by the way, he's taking people on a manned flight in 2025 to the moon, which is before he was supposed to go to Mars. I thought that was 2020 on the website, but I'm confused. But what I want to know is, how come he was quoted today, and I wrote this down, he was quoted today as, we can't get into Earth orbit yet. 2022, we're going to see a bunch of rockets fired, but we don't think we're going to make it into orbit yet. What the hell happened in 1969, Elon, and NASA for that matter? If he can't get it now, when the hell could he get it? And then Jeff Bezos, you got to love him too. Jeff Bezos asked for $10 million for Blue Horizon, and Bernie Sanders, you got to love him too, just said no because he needs the contribution from Big Pharma, I guess. Bitcoin Cash, we're going to go through the cryptos here real quick. Bitcoin Cash has gone nowhere. We've gone neutral on them. We were a little positive last week. Ethereum made a new high, broke down. Litecoin made a new high, broke down. Ripple made, kind of broke out, broke down. So these were giving us hints that cryptos may still have some life in them. And, there doesn't seem to be, a shortage of, bad investment ideas. So MicroStrategy, it broke out, it broke down. So this one is a neutral signal, maybe negative now. Robinhood Markets, very negative. These guys are in deep trouble. They have had nothing but margin problems, execution problems, know your client rule problems, compliance problems. I don't know about this one. This one's going to have its hand slapped pretty good before it comes back. And there's Coinbase, the main, the main operator in cryptos, and it's doing very well. It's made sort of a saucer bottom. Overstock.com, again, broken out, but it's a retailer, and retailers I'm going to show you that in a minute. They're going crazy. Although this one doesn't take, this one takes Bitcoin, but doesn't have any. Nobody buys anything in Bitcoin. You never need Bitcoin. Please listen to me now, okay? Please. And if you have an answer, I would love to know it, okay? Have you ever needed Bitcoin other than to gamble? And the answer is, I don't believe so. I've asked that to 10 people. Not one person knows what the hell they do with it other than sell it or gamble with it or trade it or whatever. But would you do something with it? No, not that they know of. Now this is Apple. Now what I want to start talking about now are the EVs, okay? Apple is not here as an iPhone company. It's here making, and it just announced an EV 2025, no pedals, no steering. It sounds to me like just like a little place that you sit in and you kind of converse and all that. But it'd be it's a great idea if you think about it, because you could put Apple Music in there, you could put the computer equipment in there, you could put Alexa in there, although I'd probably throw Alexa out. I can't stand Alexa. But I'm telling you that actually that's Amazon's. Sorry about that, Apple. But Apple could have a lot of great things in there because they make a lot of great things. And if it was nice and comfortable and all that, I don't see why not. There's some people that doubt it. They've held it under wraps. 2025, they say, fully autonomous robo vehicle, no pedals, no steering wheel. Now here's the thing. If you look at Tesla as a $1 trillion market and didn't know really that Apple had factored it into, right now Apple's worth a whole lot more than it was worth just a couple days ago. Because let's face it, they have as high probability of pulling it off as anybody. They're not going to, if anybody fails, they would be the last to fail in all likelihood. Oops. Amazon, which owns Rivian, and now Rivian we have here later. It's basically delivery vans. Amazon looks like it's breaking up. And this is what I was said earlier. If Amazon breaks up and a couple of these break up and start pulling the market back up, we could be in for another brutal melt up and leg up. So Meta Platforms, Facebook, I don't even know what the hell to call this thing other than Mark Zuckerberg's a criminal. I've told him that a million times. And he just needs to know that every day that we're on here. If you happen to think that he's a criminal, then just remember to tell him that in your mind. Google owns something called Waymo. Now, Waymo's another autonomous vehicle company, and I don't know how much of it was factored into that move. These are trillion-dollar companies. So if they're trillion-dollar companies, and it's believed that this company will be successful, they're putting a lot of that in there already. Now, I don't know that's the reason it went straight up. I have no idea. But, it certainly would be a valuable asset given that every company that comes out that does, some kind of autonomous driving or electric cars or whatever gets an incredible premium put on it as if, they were lathered in gold. So Netflix is another one that's another NASDAQ, almost $1 billion market cap. Pulling it up. There it goes. Broke out of a sideways move. It's got a lot of energy. This is the kind of reason why I don't see the market going down immediately. And same with Nvidia. Nvidia was probably is probably now close to $1 trillion and is the poster child for probably the most sophisticated chip company. It's not your father's Intel. Intel looks like a dinosaur by comparison. It's a Dow stock, and it's probably leaving the Dow pretty soon. They don't like when stocks don't do well. Here's Ford. Ford also has a huge EV unit. Ford is now worth $80 billion, and $80 billion off of 35 in sales, that's not bad. And that partly is because they made such a push into EV at the beginning of the year with the new administration. The new administration basically said, we're going to really push this and help you subsidize it. So Ford is worth a whole hell of a lot more than just the EV unit, and it's being priced as almost as if the EV unit not quite, getting its full valuation there. I mean, if Tesla's worth $1 billion and Ford has that many auto plants, to assemble, they can make cars too. So, you got to look at the differential, And not everybody's going to have the same quality. Somebody's going to be better than the other. Porsche's making one, Audi's making one, Mercedes making one, Volkswagen's making one. The field is so crowded. Someone's not going to be able to sell their cars at these at very, very elevated prices. General Motors, also, here's another one. Market cap is 90, sales are 120, but it looks like it's about to break out. And the reason General Motors is interesting, I put Tesla here again, just as a comparison. But Lucid Group was another electric car company, and this thing is now worth $90 billion with revenues of $230,000 last year. So, I mean, these are getting multiples of like a cajillion to one. They don't even have to sell a car. Just say that you're in the business of electronic vehicles. Maybe, as a matter of fact, if I shock somebody and just say, hey, I'm in the business of electronic vehicles, maybe that'll get me some money. I don't know. And then finally, this is Rivian. Rivian was Amazon's vans. I'm not quite sure why this would be a valuable, asset, because it's not going to be doing it for other people and making money. So I don't know. Um, FedEx still not doing well, still kind of languishing, and UPS doing the opposite. UPS strong, FedEx weak. What are we supposed to think? Market weak, market strong, market weak, market strong. Ace, what do you think? He doesn't even know. He could care less. And American Airlines. Now, the airlines, we've heard a lot about how domestic travel is coming back. Well, it may be, but I'll tell you this. If you look at all the airlines, they look like this, like they're going to break down. And I don't know of a single person that wants to go into an airport, get a colonoscopy, and have to fight with stewardesses wearing masks and all that kind of stuff, because that just, that just is not my idea of fun. Costco, now the retailer's unbelievable. Costco has doubled in like 6 months. I'm just blown away if it's people hoarding, because I don't, they don't sell, they sell like their own generic branded products. Yes, they sell them cheaper and in bigger bulk, but they always have. They didn't just start now. And so, this is very puzzling. Home Depot, another one. Look at that. I mean, this thing again has like doubled in almost no time, and for the life of me, I cannot say why this would be so good. Holiday sales or sales came in very well. There were some smaller retailers like Kohl's and Ross that came in at up 15% over 2 years. And you know why? Because they all have an online presence. So they want to spin off all their online businesses. So you'll have a bunch of online businesses like Saks Online, Kohl's Online, Ross Online. They'll do no business online because they're not big enough, really, to warrant it. And Amazon just gets all that business anyway. And Nordstrom's broke out a little bit, so that one's finally looking good. Retail is incredible. I mean, the economy looks like it is going gangbusters because of retail. I don't get it, because I really don't get it. But that's what's happening right now, and it is going to cause probably, I'm going to say GDP to go up a little bit more than we thought. But there's still people aren't working, so where are they making the goods? Mastercard. Now, Mastercard is an interesting situation because they, you know, they basically are going to be. They were going to be accepted in, in parts of Europe a little bit better than they had been, and so that helped them. But right now, retail is not doing well, and Mastercard has come up, come down, and I don't know. I don't like the way it looks, and I don't like the way Visa looks either. Visa looks like it's made a rounded top and broken down. And for those of you that have seen some of our educational shows, a rounded top is like this. It's like throwing a softball and having it go up in a loop and down. You decelerate on the way up, you kind of stop, and then you start accelerating on the way down. It's a really good chart pattern. It's accurate more often than not. And in any event, that's it for today. And we wanted to thank you for coming, for stopping by and seeing this. Exciting things are going to happen. I'm going to tell you this right now. There are really some bad signs in the marketplace. The margin debt, people that are borrowing against their stocks, is really high. it's at a record place. I was going to actually show you that chart, but there for everything that says the market is healthy, there's something else which says it's not. And I'll tell you one thing which says it's not: the people I know, because they are all struggling, and I don't know how the hell they're gonna, they're gonna be able to afford all these purchases without more stimulus checks, which I never get, of course. So with that, I want to say thank you very much. Please like and subscribe. We're here to tell you the truth. Please feel free to write us at any time. And, we're doing this for you because we want a free country back with a free market.